Leo Trade. This is Don Kaufman. Minutes to go to the cash close here on this Wednesday afternoon, July 28th, 2021. The Fed, it's over and done with. I got to tell you, what we need to be looking at right here, right now, is to answer the question, is the NASDAQ on the verge of some serious volatility? Let's actually look at that first and foremost. Some of the moves in the NASDAQ lately, and again, I've been looking specifically for this in the last, about 10 trading sessions, the NASDAQ volatility just ripping apart. And every day, people, we are getting closer to just that. So the bottom line is, yeah, absolutely unequivocally, we should see percentage moves in excess of even 2% inside of the NASDAQ in the very, very near future. It's something I continue to reiterate, especially for those of you that are kind of scalping NASDAQ, and that could be NASDAQ futures or QQQ on an intraday basis. Nevertheless, the NASDAQ and its volatility is highly likely, of course, to spill over into, of course, the broader S&Ps. Let's get to work over here and describe exactly what we're looking at in terms of the NASDAQ as we come into the cash close. Again, the Fed is over and done with. It was an absolute unequivocal non-event. In fact, the Fed came out, there was some Q&A and so forth, and they're not even concerned about inflation. All they're talking about is the jobs number. The marketplace bypassed it. I mean, ironically, the bonds finished the day massively unchanged on the trading day. The S&Ps are going to finish the day unchanged. The only thing that really moved today, well, was, of course, the NASDAQ. And why did the NASDAQ make the move? Well, predominantly because of earnings. And there's Facebook earnings coming out. Literally, there's just going to be Facebook earnings moments after the bell here. So you may see these NASDAQ futures rocking. But let's get to work specifically again on the NASDAQ and talk about its volatility. Here's the cash close. All right. NASDAQ actually moved, roughly speaking, 0.4%. So 0.4% on the day. And I'm sitting here telling you that at minimum each day, you need to see 1% to even 2% type moves. Okay. One of the things that just doesn't really resonate and shouldn't necessarily resonate with you is, we'll come back to the chart in just a second. Cruise over to the trade tab here and look at the QQQ. Again, push everything aside. Start looking at things like the implied volatility, which have come down quite considerably in the last couple of days. Nevertheless, there's still some big earnings left in tech, and the QQQ in just the next 2 days is still sitting at about a 17 vol, which is about a $4 move. Nevertheless, go a little further out in time, and again, the volatility, it's getting there. I mean, you're looking at between an 18 and 20% volatility that's being priced into the NASDAQ. How does that stand in contrast to the S&Ps? And again, one of the important points over here is to show you that contrast between the S&Ps and the NASDAQ. If you take a look at the S&Ps, the next 2 days, you're looking at like a 12% volatility. That may not mean a lot to people, but when you're looking at 12% vol, and then the NASDAQ is sitting at a 17% vol, it's the same thing as looking, you have a $12 stock and a $17 stock. You could say that $17 stock is, it's considerably different. It's a completely different animal. And yet, this particular animal, that volatility in the NASDAQ and the QQQ sitting at 17%, we're not moving at that rate. Okay, we're not moving at this wild rate. Now, cruise back over to the NASDAQ for just a second. One of the points that I'll first make is a point that I've been making kind of, well, again, about the last 10 trading sessions, and it has a lot to do with historical volatility. Now, historical volatility, this is past stock price movement, and it's averaged over the last 20 days. That's just the default. And I'm using the default over here because I don't want to try to manipulate any of the results over here. I just want you to see as clean as possible. And again, you see the NASDAQ moving here any moment. You got results coming from Qualcomm. You got stuff coming from Facebook. So the NASDAQ could be rocking here after the marketplace. Nevertheless, the first thing I want to show you is in the last 9 months, this is it. This was rock bottom for actual price movement in the NASDAQ. So evidently, price movement is on the upswing. Now, if price movement's on the upswing, there's nothing to say that it can't kind of dribble back down over here. But implied volatility shows the opposite. Implied volatility actually displays that the future of market risk is considerably more. If you will, we just showed you the option chain just a moment ago, and the option chain, it had volatilities upwards of up here of even 20% in the back month. You realize that the NASDAQ is moving at a rate right now of about 10%. That's what that is, averaged over the last, what? Averaged over the last 20 days, we're moving at a rate of about 10%. However, the implied volatility, even if you don't want to go off 20%, the implied volatility is looking more like 17%. So again, it is proclaiming that there's going to be a fairly substantial jump in actual price movement. So how does this compare for something like the spiders? So the spiders, if you take a look at the spiders, here's the interesting irony. The spiders over the last 20 days are actually showing more historical movement, meaning that the price action in the S&Ps is actually greater than it is in the NASDAQ over the last 20 days, except in the NASDAQ, the implied volatility, which is options, is screaming, get ready to rumble. And I can't stress this enough, because you will see anomalies like this all the time in the marketplace. Like whatever, it doesn't, implied volatility, we're not moving as much as we should. But anomalies like this in a major index player are going to be rare. Okay. And when you start thinking, like, all right, what happens in these major index products is that they have tendency to play a degree of catch up, if you will. And we're going to go from a rate of like, well, we're only moving at a rate of, 10%, and the S&Ps are outpacing that. The S&Ps are moving even more. So what you can actually do is see a spike, a really big spike in actual price action. Do not be surprised to see the QQQ absolutely rocking. And one of the things that you need to keep in perspective is this last move to the upside. This last move to the upside was met with absolutely unequivocally no real price action. We just kind of sputtered to the upside on a day-to-day basis, a couple of glimmers of some risk. Obviously, 2 days ago, we saw a little bit of a wicked sell-off and kind of rebounded off of that. And obviously, today's action brought us, again, right back. I should say yesterday, we literally touched down, to clarify on here, we literally touched down yesterday. Let's bring up auto expected moves. And yesterday, we actually touched outside the lower edge of the expected move in the QQQ, bouncing right back effectively today. And again, you have to look for considerable follow through to some of that risk. Now, of course, everybody listens to this is like, okay, give us a directional bias. Well, here's the bottom line. In directional bias, you're going to have to get two-sided price action back into the marketplace. And what I mean by directional bias and two-sided price action is simply this. When you start looking at the QQQ, this is not just going to be a freight train anymore to the upside. We're going to get two-sided price action, because that is what generates higher, actual price movement. Again, yesterday is a perfect example of that with a big sell-off. We rebound. Today is, I would say kind of nominal overall. I mean, here we are with the NASDAQ futures. Now we're after hours, and obviously some earnings are coming out. Only a 0.2%, 0.3% move inside of the marketplace. All right, so let's push aside some of the NASDAQ. Again, I expect to see, at minimum 150 point price swings in the NASDAQ day to day. More or less, though, I think you should even expect 300 point price swings. Doesn't mean that we're per se going to close up or down 2%, but you are going to see, again, full 2% type moves on an intraday level inside of the NASDAQ, pretty much coming to a theater near you. As I was also kind of delineating a few moments ago, the Fed was an absolute non-event. You also kind of think about earnings. Earnings has also been a little bit of a non-event. Apple came out, the stock actually has backed off a little bit today. Meanwhile, Google, you're looking at Google and you're thinking it ripped to the upside, but Google, it ripped to the upside and actually faded on the trading day. I think that's fairly critical. Facebook, after being up and carrying the marketplace to a degree, Facebook, here we are after hours, and Facebook is getting absolutely decimated in the last 3 minutes of trade. One thing that's really apparent inside of Facebook, though, and let's come down to it, it had a $373 expected move. $373 product with an $18 expected move. Roughly speaking, this is even closer to about $20 of an expected move. You should see this stock drive, to the level of about, let's put $20 below 370, see us, well, effectively right where we are. So when you're looking at the Facebook, the Facebook after hours here, and you're like, wow, that thing got crushed down to 350. It hasn't done anything outside of the norm at this point in time, other than it did cut the NASDAQ futures in half. And that's exactly what we kind of anticipated here in terms of price action inside of the NASDAQ. Nevertheless, some of the tech earnings have actually faded to a degree in the likes of, for instance, Tesla, which happened to be bid up a little bit today. Tesla, almost a non-event on earnings. Apple moved $2. This thing was poised to move over $6, non-event. Okay, Microsoft, you kidding me? Move what? 32 cents, but the price action on an intraday basis is critical. So we have a nice little confluence going on here of aspects where a couple of the major tech companies have released earnings, faded on some of those really positive numbers, and the fact that we expect historical volatility to explode. Again, bottom line, get ready for again being on the verge of some serious volatility inside of the NASDAQ. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye bye.